Hello, Sam. Good evening. You well set on your end?
Yeah, I'm good on my end. We're live.
We're live. We're live. Hey, traders. How are you this evening? It's been quite a long time. We've not done this session, right?
Yeah, it's been quite a while. It's been
Yeah.
quite some time since we've done the sessions.
And we're now in October, coming with a very hot topic, very important one. Still on risk management. We want to look at trading plans. Yeah.
Yeah, so it covers risk management, but generally the entire scope, which is creating a trading plan, and then progressing from there. So how should you approach your trading in general instead of having a spontaneous trade here and there?
All right. So maybe before we go to look at the trading plans, you might have some updates for the markets. What has been happening? I mean, it's been a crazy September, and now you're in October. Expecting some great events coming up. I think it's Friday tomorrow, right?
Yeah, it being a Thursday, tomorrow we expect NFP. So that is going to shape our trading probably for the following week. Although we still have a lot of news coming in from interest rates and how the Fed is planning to structure their interest rate rises in the coming months. But in the meantime, we've had quite a push from the dollar. So it was strengthening, it was weakening for the better part of the week, but then right now it has shown some signs of weakness between yesterday and today. So yeah, so that's as far as the news goes. We're expecting the markets to be a bit more calm as we wait for tomorrow's NFP session, which is going to be what is going to define the bulk of the trading.
Sure. So the labor market data will actually give October the start of that. We need to see a little bit of either a bull run or a bear market. We don't know what happens, huh? Yeah, and also we've had some news about the OPEC, about the oil. Yeah, they're cutting down the production.
I think when it comes to the NFP, usually our forward-looking indicator is the ADP. So ADP showed some signs of improvement. So traders are expecting that's going to be the same with NFP.
Yeah, I've mentioned something about the oil. It's like the OPEC is taking a cut on the production.
Yeah,
you've seen that piece as well.
I think OPEC has formed a big part of the news this time because they've discussed on having some oil cuts, some production cuts, and that has affected the markets going forward. So from their perspective, because we're expecting a slowdown in economic activity globally, then they're anticipating that it's appropriate to cut oil production, and that is going to have repercussions across different sectors in the market.
That's the reason they have given for that. But I've seen a commentary somewhere that US president is saying it's not necessary. So let's watch this space and see what happens. Yeah.
It's going to be a very interesting because I think prices have shot up.
Yeah.
And in countries like the US, it's the effect in the economy is almost instantaneous. Start seeing oil prices at gas stations rising almost immediately, and back at home.
Okay, so very good start. Traders also need to understand those events, the fundamentals, because it can be a very good part of the trading plan as well. So let's go back to what we are looking at today, the trading plan. And basically, when talking about a trading plan, just like a business plan, what is your go-to-market strategy or plan? If you don't have a go-to-market plan, then it's more of like you gambling. What's the framework that you have? How will you be making your decisions? Yeah. If you have a plan in place, then it's going to drive you towards which steps will you be taking. What logic are you using in the markets? Okay, so you need to know how to handle both positive and negative outcomes, and this is very, very necessary for a trader. Yes, Sam?
Yeah, it just shows you it's the general approach, because at the end of the day, trading is not always going to be rosy. So you need to have some sort of structure that you're following so that you're not impacted when things take a turn for the worse. So
yeah, when you say it's not going to be rosy, you remind me of an old saying, but it's not related to this one, so let's leave it. Okay, so why do you need a trading plan? As a trader, you need to ask yourself, why you need a trading plan? Yeah. You want to take it away, Sam?
Yeah, so I think when it comes to trading, it can't be spontaneous, because at the end of the day, you need to have a process that you can repeat over and over again. And if you get lucky, the question is, are you able to be consistent? If you maybe you've made profit on account, are you able to do that over and over again, no matter what's happening globally? And that's where the trading plan comes in. It helps you stay on track, and it helps you avoid a lot of the biases, because as humans, we always have biases. And it's very appropriate that you stick to a structure, a reference point that helps you avoid certain mistakes in the market, or avoid certain shortcomings, being human.
Yeah, sure. It's just working on having something which you can repeat, not being spontaneous. I heard you mention something like spontaneous, talked about luck. You don't want to be relying on luck on this market. Actually, luck is, you can't depend on luck. Yeah, it has to be something that you can repeat day in, day out, or whichever is your trading time that you choose. For example, when are you opening your trades? When are you closing your trades? How do you manage those trades with the likely outcomes which you get in the market? Because once you open a trade, either be a profit or a loss. Okay, so
Exactly.
how do you manage that? Yeah,
exactly.
So you need a trading plan. Okay.
Yeah, and a trading plan, I think, is more than just rules that guide how you enter a trade. It's the whole scope. Yeah, and I think this is where it is broken down very clearly. I think you can take this, Mathew, how what a trading plan constitutes or is encompassed.
Sure. So a trading plan, you have to put in, you have to look at a wide scope, not only the strategy, not only when you're opening the trades, when you're closing them, and how you're managing the risk, but it's part of it. So you're looking at your goals. Just like when you want to do an investment, you need to know, why am I investing? If you want to do trading, likewise, why are you trading? What is your goal? Okay, you're looking forward to make short-term income, long-term income. What are your goals? Yeah, what do you want to make? For example, let's say in a week, in a day. I think there is a slide where we have talked more about goals. Yeah, in terms of the most crazy goal which you have.
Yeah,
and you come on breaking down into the feeder, small things that
daily
you have
targets and all that. Yeah, so this is just the scope. The first one is then define your trading rules. So your trading rules are your trading system, or your trading approach. So you see, it's part of the larger plan when it comes to trading. Then you have risk management, and then you establish a routine, and then decide how to track your trades, because you have to always review what you're doing, if you need to improve or if you need to update anything in your plan.
Sure. So on the trading rules, simply where are you entering, where are you exiting, and the outcomes of the trade on the risk management. How do you manage that? For example, you've gotten into, the trade is going the way you're not expecting. Yeah. And how can you get in to manage the losses which you're getting? Are you going to scale out? Are you going to use a stop loss? What is going to happen? If you're making a profit, for example, how are you going to prevent yourself from again leaving the trade to go to the opposite direction, and then you all of a sudden find yourself in losses? Tracking trades, a journal. Yeah, you have your daily target. Have you recorded your trade? Do you know your win rate, for example? And with your win rate, how are you going to play around with the risk reward to be able to profit consistently? Yeah?
Exactly. Yeah.
Okay, so on to the next on the goals. Okay, so on to the next on the goals. This is where you're talking about your crazy big, passionate, life-changing goal that you've ever wanted.
Exactly.
Yeah, you want freedom.
Yeah, I mean, the whole point of trading is, you know, there has to be some goal. Otherwise, there is no point to it. Yeah, because trading as it is very difficult. So you have to have something that is motivating you constantly. And this is where your goals come in. This is where you need to know what reminds you about what you're doing when it comes to trading.
Sure, exactly. And we're talking about goals as well. This is where we bring in the risk management as well come in on the goal, because there are curb levels that you're working on, or what is your trading curb? Where do you cap your losses, for example? Not only your goal in terms of profit, also you need to look into how much loss, at what level are you going to take some time off, relax a little bit, revisit the market again. Yeah. So it's goals in terms of profits and the losses.
Yeah, because that's very common actually with traders. You find that it's a very common occurrence where you only cater for one aspect of your trading plan, which is your trading rules. And in all honesty, you end up ignoring a lot of aspects that are equally as important, like when to walk away and reassess your plan and the likes. So the goals are your starting point, where you have your big goal, and then you have that goal divided into various time frames. So in this case, you have your 6 months target, or a smaller time frame, and then you get your monthly and finally your weekly. So planning them in this way enables you to track progress, because at the end of the day, you need to know if you're making progress or not. And that's where the goals come in. They're a way to benchmark on whether you're improving or whether you're actually attaining your crazy, passionate, life-changing goals at the end of the day.
Yeah, maybe I can add something here. On goals, it's always good to have just put them down, write them somewhere. For example, I'm targeting to make like sometimes I advise, you might not know how much money you can get, but you can at least, out of your trading experience, out of your plan which you have, you might have an idea that I might not miss to get 15 pips, right, a day. So if you get 15 pips in a day, for instance, most of the times you find that traders will meet that target and exceed it. So a goal will help you know whether you're performing well or you're performing poorly. And most of the times, if you're exceeding the expectations, maybe for a day and for a week, then you might want to even relax a little bit. And
Exactly.
yeah, it will guide you on which steps you're taking. You even be more relaxed. Yeah,
because you don't need to push hard every day, because you might end up burning out. So the best thing to do is, if you have daily targets, once you attain them, that's it. I met a group of traders who had a target of 20 pips a day, which is quite reasonable in my opinion. So once someone hits that target, then they're out of the market, they wait for the next day. It helps in the trading process becoming more sustainable, because if you're spending more than 12 hours a day on your screen, then chances are you're going to burn out in your fourth, fifth month. But if you're a bit more settled, you're more organized, then your trading lifespan as a trader is going to be increased greatly.
Yeah. Let's now focus a little bit on the rules and maybe the trading style. So there are different ways someone can trade. Of course, this is not new to the traders. You can be a scalper, a day trader, a swing trader, or a position trader. Then this one is in line with what we've talked about on looking at your goals. So do you want to make certain amount of money in a day, for example, in few hours or in weeks? What are you looking towards? And this is going to shape your trading style in either a scalper, a day trader, swing trader, and position trader. Okay.
Exactly.
And your trading plan again is you need to merge it with your style. When I talk about style, is your work. Maybe you're working, maybe you're a student, maybe you want to do it as your full-time job. So then how do you position yourself? You might find yourself, you want to scalp, or you want to scalp, yes, but you've got, you have a lot of work to do. You don't have time to concentrate and find those sniper entries or those fast moves. Okay, so you need to tailor make your style in such a way that you will be trading at the time when you have when you're free, yeah, when you see you're not going to be occupied and messing up. So defining your trading rules, it will depend
Exactly.
on,
Yeah, so I think it comes
time.
back to the point of not being spontaneous. In that, if you understand your rules, if you understand yourself as a person, and if you understand your routine and who you are, then it makes it better for you to know what suits you perfectly. Yeah, and these are things that are often tended to get ignored in the market or with traders. A lot of traders tend to ignore these aspects, and it's very important that you're able to match who you are to the style of trading or the style of assessing the markets and all that.
Sure. So again, I remember this one before you go to the next level of risk management. You see, also understanding your profile is always important, because you will know whether you also look at the capital which you're putting in. What is your risk profile? How much capital should you put in? Which markets are you focusing on?
Exactly. Yeah.
Because there are times of the day when you can't trade on certain instruments. For example, on our platform we have the NSE instruments, and you see for us here in Kenya we have the NSE. The exchange is open as from, is it 9 to around 3?
Yeah.
So
from around
if from around 9:30 to around 3, that's when you're able to trade on those counters. So then if you don't have time during that period, you get time maybe after 5, and you want to trade on those stocks, then of course you won't be able to get up an opportunity. Let's say, for example, you want to focus on stocks as well. Stocks open with very big gaps. Do you understand that you need a big capital to trade with them, even if they have a small required margin to trade, for instance? Do you understand the profile, your risk profile, before you move in to develop your trading plan? And it will inform you into the rules that you're going to apply into it.
Which is an interesting question. Do you think the capital size dictates or can dictate your trading style at the end of the day? Because if you go back to the previous slide, we have guys who probably hold trades for more than 2, 3, 4 months. Then does it go without saying that you need a relatively bigger account to hold that? Secondly, if you are a patient person, for example, does that also coincide with what style you are, or what style of trading you want to pick at the end of the day? Because that also affects how you're able to react or how you're able to be comfortable. Because sometimes you take trades and you're not comfortable. Like you'd want to be on the screen until that trade has been closed.
I mean, I'd want to say is your capital will really matter, especially if you want to take on swing trading or position trading, because I'm trying to think that if you're trading, you're a position trader or a swing trader, you might want to be looking at the trades from a very high time frame. Or if you're an investor, you want to look at trades from a very high time frame. If you're holding your trades for days without closing them, then probably you're going to find very big swings in the market. Okay, if for example you hold a position, I don't know whether I can put in a chart here, I don't know whether I can see it. If you're looking at this pound yen and you've been holding your trades for several days, then it means you would have to take all these swings. So if you have got little amount of money, even if you've taken the lowest lot size, then it means you might be wicked out before you have the move in the expected direction. So some I think yes.
Exactly.
Yeah.
And that's where this mismatch between who you are and what you're capable of as a trader comes in. So most of the times, maybe some guys don't necessarily lose money because of the strategy, but because of these small mismatches in their trading styles.
Sure. So if you understand the risk profile, you understand your trading style, and if you have that mismatch, then everything becomes chaos. Nice one. Thanks for bringing up that one. Risk management plan. This is just a very basic one that if you do not want to get a very big erosion of your capital, then take a very small loss. Yeah. Have a very small loss. Manage it. And then it's always going to look at it in terms of a percentage. You see, part of your trading plan is knowing where are you entering the market, where are you exiting the market. So on the risk management, especially at where you're exiting the market, we always say that have a stop loss. That is very okay. But it might not be helping you if at the stop loss level, you're losing almost everything you have in your account. It isn't helping. Yeah. So you want to look at a percentage. There is we need to look at it this way, that if, for example, you're losing, if you're losing and your capital is just getting eroded every now and then what the percentage risk does is it will reduce the amount of risk which you're getting, okay, reduce the amount of losses you're taking in respect to the amount of capital which you have. And then as your account grows, then you'll be having, of course, a bigger risk amount. But again, remember, you're getting a bigger profit because it is in line with it is going to direct you in terms of the trade size that you'll be taking and the amount of profit which you will have in that case.
Exactly. And there's something that you mentioned about having a loss limit. But before you get into that, a lot of when you start thinking of things as a percentage, then you start realizing that trading is not linear. You know, if you make a loss, if you make a 25% loss, you're not supposed to, making 25% back is not going to recover your account. Yeah. You have to go a step higher and maybe make 33% as in what is shown on the slides, because it's not linear. When you're doing position sizing and when you're doing risk management, when you think of it as a percentage, then you start getting the true picture of, if, for example, I lose 25% of my account, the remaining balance, for me to get back to break even, I probably have to trade more, or I probably have to risk more just to get to the point where I was before I made that loss. Yeah. And understanding that it's not linear then makes you see that it's very important for you to reduce your risk per trade. Yeah. Because in I think in risk management, you have this term called probability of, I think it's loss theory or something like that, where you can get to a point where it's almost impossible to recover your account. Yeah,
you want to go deeper to econometrics now. All right, so
risk of ruin. I think it's risk of ruin.
The risk of ruin.
Yeah.
There are deeper theories when you want to go to risk management, but just to keep it simple, just have set a daily loss limit. Actually, you can start with it from monthly. You go weekly. You go to daily. Go to single trade, such that if you're talking about a 2% risk per trade, then maybe a 4% risk the whole day.
Exactly, because at the end of the day, trading is a game of survival. And a lot of traders don't like hearing that. Trading is a game of survival. If you can take care of your downside, then that's when the upside starts taking care of itself.
Sure. So we've been talking about consistency. What you want in doing all this, in having a plan, something that you can repeat over and over and over, is because you want to get consistent results. You can trade in the markets, you can take both profits and losses, and you will still be in the markets. Yeah. So you want to be successful, but then you have to establish a routine based on a plan, a go-to-market plan. So this one comes in by shaping in your behavior. You want to understand your attitude, and then all this comes in as discipline. Okay. And you want to consider trading as a profession, just like whatever you're doing, you're a business person, you are in a certain profession, you're doing whatever you do out of experience? Why is it that you want to take trading as something that you get in within a very short time, and then you rake in so much and a lot of profits without taking time to learn and understanding and even having a plan? So
Exactly.
it's
So
it's a game that you have to treat
Yeah.
as a profession, right?
Exactly. You know, the difference between independent traders and traders who work for a fund management or something like that is it's easier for them to follow a certain routine, and that's why chances are they're more profitable. When it comes to you managing yourself, then you have to instill that discipline in you, to follow your rules, to follow your routine, and that's where establishing a routine has to come into play, because trading becomes that much difficult because every other thing you do in life, be it going to school, having a job, is there's always some structure given for you. So it's always
It's a
placed there.
routine. It's a routine.
Exactly. Yeah. But in
Yeah.
trading, you find that you come in and you're free to do whatever you want to do, you know, and that usually has consequences if you're not disciplined.
Yeah, and but when you talk about this, it's not something hard, just a matter of following very simple rules. I mean, maybe you can talk a little bit about a strategy. Does it have to be so sophisticated? Does the plan has to be like has the most difficult indicators you're using in the market? Like you have followed every mentor in YouTube and you've got a lot of information. It doesn't have to be like that. Actually, if you can just if you want it simple and clear, because that's what you need, just take one system, have one plan, follow it, repeat over and over and over up until you understand it, you can implement it with ease every single day. Then you get closer to your success easily. And I'm getting a question here from Wycliffe on the one of the viewers that we have here is asking and would want to be a pro, make it a full-time job. Wycliffe, what you have to do is just make it simple as possible. You know, you can trade profitably by having a plan or a system that uses only the moving average or whatever you want, or maybe the order blocks or order flows, or you can use Fibonacci, or you can use fundamentals, and you'll be successful. The thing is, have you taken time to understand it properly such that you can implement your plan over and over? Because there's no one single strategy which you would not be taking losses and profits. It's a matter of managing all of them. Yeah. So
Exactly. So yeah. So one of the things people mistake is that complexity doesn't necessarily make your system better. Yeah. And it requires an in-depth level of understanding to know that even a simple moving average strategy, as long as you understand it in a level that is beyond the mechanical, you know, there's that if you see X, you do Y, you see Z, you do. If you understand it beyond that mechanical level, that's when you truly become a profitable trader, because it's never mechanical. Trading is never mechanical. You have to adopt that in-depth understanding of the market, and you can't mistake or confuse that with making a system more complex.
Sure. So establish a routine, use the simplest things you can use in the markets, and then master them in such a way that you can effect them without a lot of difficulty. So something also that's very important is understanding your trading behavior. Yeah, apart from analyzing the markets and having your strategy, do you know your trading behavior? And this one will lead you to understanding your win rate, for example. It will help you discover yourself more. So track your trades. Yeah, it doesn't have to be very complex. You can even put it in a very simple Excel or even Word and plan your trades. For example, have how many trades in a day and what target do I have for these trades? Not in terms of money, because most of the times, you know, the amount of money you get in a movement might depend with the position size which you're taking, and that one will be dictated by the amount of money which you have in your account. So I would advise, and I don't know what view you have, Sam, I think it would be better if you focus on tracking the amount of movement you can get in terms of maybe of pips, right? say 15 pips, say 30 pips in every single trade, are you able to track like a specific number of trades in a day, maybe for the whole week? And then you can identify, out of the trades I take, I'm able to win like this number of trades. I'm going to lose this number of trades. That's what is going to help you to learn on the winning trades, what did I do? On the losing trades, what did I do? And then you can take corrective measures. And it's even easier to automate that way if you've ever thought of automating your trades. Okay.
Yeah,
So
I think when it comes to tracking, as you've said, it's like a report card. And having a trading statement generated by your MT5 is not enough for you to decide or to optimize your system, to know where your weaknesses are. You need to go a step further to truly understand what makes your trading profitable or what makes your trading lose you money. Yeah, you're not just going to see that from a trading statement. You need to take a step further. Record. I've seen traders take screenshots of their trades and just put them in a file so that they're able to come back and analyze what exactly was happening in the markets. So you need to take that step further and do your own tracking, because the statement in MT5, MT4 isn't enough if you want to improve your trading exponentially.
Okay. Yeah, that's quite on point. So identify patterns in market and your approach of trading, learn from your losses, study trades, look for how you can improve it, for example. I mean, there's a question I really wanted to hear from you, Sam, your view. Do you think it's good to have your targets in terms of the movement you can get in the market, or in terms of the amount of money? Because for me, I think it's better if I, as Mathew, let me say as a trader, that I'm targeting to get 15 pips in a day, or 20 pips in a day, or 30 pips in a trade. Okay, or maybe 100 pips if I'm able to get it. What do you think?
I think it can't be monetary wise, because accounts differ in size. Yeah. If I'm making 20 pips in an account, then you can compare that across multiple accounts. But if you say it's monetary, then it leaves room for funny behaviors like scalping, or
scalping with a very big lot size.
Yeah, or over trading. So if you can consistently make a certain number of pips on a certain account, then you can do that across other accounts. Then I think that's a more a fairer measure of consistency or tracking, in my opinion.
Exactly. At least that's what I wanted to hear, and I'd want the traders and the ones who are listening to just know it's not all about the amount of money that you're seeing appearing spontaneously on your trade. It's about, are you able to get that movement over and over? Can you follow the same steps for the same financial instrument at specific times with the same plan and the same risk management? Maybe you need to be flexible a little bit and be able to make that movement. Yeah. So that is what you will need to have a plan for and be consistent. We have Jude is saying as joined here late, and you want to get this session. There's no problem, Jude. Thank you so much for coming, and you will find these sessions recorded on our YouTube. So after at the end of this one, we won't delete this one. Of course, it will remain on our channel on the YouTube. FX Pesa, search FX Pesa, you find our channel, and you'll be able to review them over and over. There are others which we've done on different topics, trading strategies, on trading psychology, and similar topics. You can find them there. I see a question here. Sam Wycliffe is asking whether FX Pesa would consider adding synthetics on their accounts like other companies. Okay, maybe it's something we can put forward. Yeah, we can recommend and see whether you have them.
I think synthetics are broker specific, because a synthetic instrument is an artificially generated asset. It's not really
it's something that we don't maybe to, you see, there are other things which have not been here and we've had them added. For example, we didn't have the NSE instruments at the beginning, but now we have the NSE, right? So it's good to note that. We'll pass it on, and see whether we can have them on our platform. Yeah. All right. I think we've come to the end. But before we just close it down, just want to urge the traders who are here and the listeners, follow us on these socials, and you can get a lot more information on the Facebook, Twitter, FX Pesa, Instagram, and YouTube. This is where you can find all these sessions recorded. And by the way, you can also find us on these socials. Sam is in Instagram and Twitter. Last time you had a Twitter Spaces together with Rufus, market analyst, right?
Yeah. We do have Twitter Spaces, very interesting.
Mm-hmm.
I'd encourage guys to join those.
Okay, and for more of these sessions, if you want to speak with us one-on-one, visit us on our physical offices. Sam is in Eldoret, I'm in Nakuru. We have our trainer, Edwin in Nairobi. We also have our friend in Thika. Yeah,
Robert.
And Robert in Thika. Kitengela, we have Kevin, and in Isli as well. So visit us. We have a lot to discuss with you. I don't know whether we take one question from Edu asking about whether we can expand on patience, greed, and fear. Sam, what do you think? What can you say about patience, greed, fear?
Okay, so that's a very interesting perspective, because patience and greed is what actually fear and greed is what move the market. At any one point, you're trying to balance between how much you want something and how much you're afraid to lose something. So as a trader, you need to know what side you weigh on mostly. If you weigh more on the side of greed, then you'd find yourself taking more risks in the market. And if you are more on the side of fear, then you find yourself being a bit more cautious, taking less risks, closing your trades earlier. So it's very, I think it's a very complex topic, because the behaviors how you are when you're in profits and how you behave when you're in a loss, when you're in a losing trade, can be quite a very interesting case study. Yeah.
I have this view. Maybe we look at it in terms of what is causing that fear, what is causing that greed. Once you know the cause of that fear or that greed, then you're likely to find a solution. Let's talk about fear. What's making you feel like you're afraid? You're trading, you have a trade which is open. Why are you afraid? What's making you feel scared or feel butterflies? Probably these are the likely scenarios. You have money in your account, you place a trade, and you're probably getting stopped out. Of course, you'll have a lot of fear. Okay, or you've placed a very big trade, it's not going in your favor. You will feel fear either because you don't have a stop loss, or you're taking a very big hit, right? A very big lot size. What is the solution? Take a smaller lot, right? Have a stop loss, and the fear is going to go away automatically. Another reason why you might have fear, you don't have a trading plan, so you don't know what you're doing in the markets. You may be probably gambling, because if you don't have a plan, then you're gambling. That's going to cause fear. Greed. Other reason for greed is going to the objectives. Do you know what you're looking for? Are you waiting for 15 pips, or you're just placing trades and then you'll get profits? I mean, if you have a target, I
think we become greedy when you take the trade, but during the trade you're so fearful. So I think it does affect how we trade. There's a characteristic called loss aversion. So when you're in a losing trade, then you're afraid of realizing that loss. So then you end up taking a bigger loss. So can be quite, balancing the dynamics can be quite challenging, and it's understandable. And that's where the trading plan comes in, because it creates some sort of objectivity around it. And then one of the biggest fears is the fear of being wrong. Because someone probably has worked for 2-3 weeks on a trading strategy, and they don't want that trading strategy to be wrong. There's also that fear in the among traders.
Okay, so just to sum it all is if you just start solving one mistake by another, because one mistake leads to the next. Just like you've mentioned, some, there's a way you can work around fear leading to greed, leading to patience or impatience. Just a matter of, if you find one mistake, just work on that mistake and it will correct to the next level.
Yes. And the only way you're able to see that is if you have a plan. And if you've been recording your threads, recording your emotion, recording what you've been feeling when you're taking those threads.
Sure. So it's just taking us back to what we've just discussed. And Wycliffe is just saying it's better to earn $2 than lose 20 holding on a pullback. That's spot on. Yeah. That's spot on. And we have Edwin here, and Eritu is recommending Trading in the Zone, a book he would recommend. That is very okay. Read those materials and get the knowledge. It will help in managing your emotions and looking particularly into your style of trading. So I think we don't have much to discuss up to that point, and we might want to call it a session at this point. Have you anything to say, Sam?
I think a big part of trading also is realizing who you are as a person. But if you're already trading, then naturally you have a very aggressive attitude in life.
All right. There are so many quotes you can give. It's a journey. Develop your plan. If it doesn't work, go back again, reorganize it. It's gonna be okay. About the markets, tomorrow we have non-farm payrolls. It presents great opportunities as well. It's risky, so you have to balance all of them. So thank you so much, guys. Have a good evening. See you next time. Bye.